You're watching politicians somehow beat the market year after year while your portfolio barely keeps up with inflation. You see the headlines about Nancy Pelosi's trading success, and you think maybe it's just luck or insider information. That's not wrong, but it's catastrophically incomplete. I've spent years tracking what the smart money actually does, and Nancy Pelosi's recent stock disclosures tell an incredible story. Over her latest reported trades, she's deployed over $24 million across 11 major positions. But here's what caught my attention: this isn't random stock picking. When you map out her trades chronologically, 3 distinct patterns emerge that explain why her returns have been so consistent. The first pattern is obvious once you see it, but the second one is what nobody expects. Pattern number 1: Pelosi is betting big on technology dominance. Look at her largest positions. She put up to $5 million into Nvidia, another $5 million into Microsoft, and $5 million into Intel. That's $15 million across just 3 tech giants. But she didn't stop there. She added positions in Apple, Google, Amazon, Broadcom, and Salesforce. When you add it all up, roughly 80% of her disclosed trades are concentrated in technology companies. Most financial advisors would call this risky, but Pelosi clearly sees something different. That brings us to the timing pattern that's even more revealing. Here's where it gets interesting. Pelosi bought Nvidia in June, right before the AI boom really accelerated. She loaded up on Broadcom in November, just as semiconductor demand was surging. Her Microsoft purchase came months before major AI announcements. Either she has incredible market intuition, or she's positioning herself ahead of policy decisions that could impact these sectors. The pattern suggests she's not just buying tech, she's buying the companies that benefit most from government AI initiatives, infrastructure spending, and regulatory frameworks. But there's one trade that breaks this pattern completely, and it reveals her third strategy. In February, Pelosi sold between $500,000 and $1 million worth of Tesla stock. This stands out because Tesla was her only major sale while everything else was purchases. Think about the timing. This was right when questions about EV subsidies and autonomous vehicle regulations were heating up in Congress. Meanwhile, she was buying traditional tech giants and cybersecurity plays like Palo Alto Networks. It's like she was rotating from speculative growth into established tech infrastructure. The message seems clear: she's betting on the companies that build the foundation, not just the flashy end products. This reveals something crucial about how she views the next phase of technology investing. Look at her newer positions: Palo Alto Networks for cybersecurity, Salesforce for enterprise software, and even Uber for the gig economy infrastructure. These aren't just tech stocks, they're the backbone companies that other businesses depend on. Every company needs cybersecurity, customer management, and logistics platforms. Pelosi seems to be betting that as AI and digital transformation accelerate, the companies providing essential business infrastructure will be the real winners. It's less sexy than buying the next Tesla, but historically much more profitable. Now here's what this means for your own investing strategy. You can't replicate Pelosi's information advantages, but you can adopt her structural thinking. She concentrates in sectors she understands, focuses on infrastructure over speculation, and isn't afraid to make big bets when she sees opportunity. The key insight isn't to copy her exact trades, it's to develop the same level of conviction in sectors you can research and understand. Whether that's technology, healthcare, energy, or consumer goods, the principle remains the same. But knowing the strategy is only half the battle, you need to know how to track and implement it. Here's what you can do immediately. First, check out the House Stock Watcher website to track all congressional trades in real time. It's free and updated regularly. Second, look at your own portfolio concentration. If you're spread across 30 stocks, you're probably not going to beat the market. Third, research the infrastructure plays in sectors you understand, whether that's payment processors in fintech or semiconductor equipment makers in tech. Finally, set up position sizing rules so you can make meaningful bets when opportunities arise, just like Pelosi does. The difference between knowing and doing is often just having a systematic approach. Pelosi's success isn't just about access, it's about having strong convictions and the courage to bet big when the research supports it. You might not have her information flow, but you can develop the same disciplined approach to sector analysis and position sizing. If you want our latest deep dive analysis on the stocks institutional investors are actually buying, check out nexusaicalls.com.